नमस्कार दोस्तों, हर संडे की तरह आज भी आपके साथ जुड़ चुका हूँ। मैंने आपको बताया था कि जो स्पेसिफाइड नॉन फाइनेंशियल एसेट्स है, इसके बारे में हम लोग धनंजय जी गोखले को इनवाइट करने वाले हैं। आज वो हमसे जुड़ने वाले हैं। ये एसएनएफए के बारे में जो अकाउंटिंग ट्रीटमेंट और बहुत सारे जो टेक्निक्स क्वेश्चन है, उनके जवाब उनसे हम जानना चाहेंगे। हम 2 सेशन करेंगे। दोनों 20-25 मिनट्स के आसपास होंगे, लेकिन पैक्ड और लोडेड विद इंफॉर्मेशन आपके लिए होंगे। ये देखने के बाद भी अगर आपको लगता है कि आपके कुछ डाउट्स सॉल्व नहीं हो रहे हैं, सवाल पूछिएगा, वीडियो को लाइक कीजिएगा, शेयर कीजिएगा, सबको बताइएगा कि हम लोग हमेशा कंप्लायंट बैंक रहना चाहेंगे। तो आइए धनंजय जी गोखले से मिलते हैं आज के पहले पार्ट के लिए। थैंक यू। नमस्कार, जैसे कि हमने आपको बताया था, आज हमारे साथ जुड़ गए हैं बहुत दिनों के बाद धनंजय जी गोखले, जो चार्टर्ड अकाउंटेंट है और बहुत सी बैंकों को सलाह भी देते हैं। हमने पिछले 2 एपिसोड में आपको बताया था कि हम आपके जितने भी टेक्निकल क्वेश्चंस हैं वो धनंजय जी से पूछेंगे और उनसे जानना चाहेंगे कि ये जो स्पेसिफाइड नॉन फाइनेंशियल एसेट के बारे में जो गाइडलाइंस आई हैं, जिसके बारे में हम 2 शोज कर चुके हैं, इसके बारे में हम उनसे टेक्निकली क्या क्या हो सकता है। फिर आयराक नॉर्म्स का एक पन्ने का सर्कुलर है, उसके बारे में हम उनसे बात करना चाहेंगे। सो धनंजय जी, मेरे कुछ सवाल है, कुछ यानी कम से कम 25-30 सवाल है। आई वुड लाइक यू टू वेलकम टू द शो। थैंक यू फॉर ज्वाइनिंग एंड हेल्पिंग द अर्बन कोऑपरेटिव
Thank you
बैंक्स
very
इन अंडरस्टैंडिंग थिंग्स इन अ बेटर वे। सर, ये कंप्लीटली नया फ्रेमवर्क लेके आए हैं रिजर्व बैंक वाले। रिजर्व बैंक कौन सी तरह की गैप, व्हाट टाइप ऑफ गैप्स रिजर्व बैंक ऑफ इंडिया is trying to address through these guidelines which were issued on 16th of July? Floor is yours, sir.
Yeah. First of all, thank you for inviting me. And I know that it's a long gap in between.
Yeah,
And it's always challenging in a way to address the queries which you are raising, because many times those are not really queries actually. Those are more to dissect the RBI circular. So that I
yeah,
fully understand.
yeah.
Now, starting with the first one, actually, see, as far as the perception about this 16 July circular is that RBI is coming out with a new framework and a number of other things. I'm having a slightly different view. There is nothing new framework as such.
Okay.
Nomenclature has got changed, so now it is specified non-financial assets. And so within NBA, actually, non-banking assets, we can say that it's a carved out portion wherein when a bank acquires a non-banking asset in satisfaction of the claim, that is typically NP accounts. So we broadly will call it as a SNFA. Now, having said that, actually, if you look at this five-page circular, it more talks about the accounting treatment, which per se was supposed to be followed by the bank. So I don't think that the gliding path which is given for adopting this circular of September 27, it will apply only partially to a certain extent. Now, why I'm saying that is, I will divide that accounting treatment into two parts. First is that when you acquire a particular asset at the initiation stage, even though RBI hasn't specified that anywhere in the circular, it was a basic accounting treatment which was supposed to be given to record those NBAs. Means I'm purposefully using the word NBA because prior to this, the word was NBA. So the NBAs were supposed to be recorded at net book value. Now, a simple example of net book value is it will be the ledger outstanding balance minus corresponding BDDR. So what remains is your net book value, and of course IR, which is a contra entry. Now that accounting treatment, even though it was not specified in RBI circular, that was understood as far as the accounting concepts were concerned. In addition to that, actually, there is a publication from CA Institute, which is a bank audit guidance note, which was amply clear about this specific accounting treatment. So there was enough of guidance which is already available and it's available in public domain. Now, what has been added up in this framework is that there is something which is very similar to the security receipt accounting, that is SR accounting, which RBI had came out with a guideline a couple of years back,
So that was
wherein
in
RBI specified.
2021. They came out with those guidelines.
Yeah.
Uh,
Correct. Now, in that guideline, what RBI had added up was that even in SR, actually, the initial recognition was supposed to be at NBB. Then it was valuation was supposed to be on, the values which will be published. So typically NAV values. Now, in addition to that, what RBI stated that for particular class of SR, you have to presume particular class means wherever it is more than 10%, you have to presume that the advances, even though they are technically out of your books, you presume that they are continued in your books and then arrive at the net book value. Now, the same concept has been incorporated over here. And that's a good concept in a way, it's a conservative concept. Now, what is the repercussion of that? So, first part, as far as accounting is concerned, at the initiation stage, RBI has only given a clarity, or I should say, RBI has reconfirmed that net book value concept. So that is the first part. When we come to the second part, actually, as far as the conservative principle, I'm saying from practical point of view, you cannot postpone your BDDR in any way. In the sense, there was an indirect way to postpone the BDDR by acquiring an asset at upset price. Indirect way, I'm saying. So I'm not saying that the banks were dodging that, but now that option won't be there. It will be a graded approach wherein non-banking assets will also be subject to reduction in value, book value, I will say, at par with NPNOs. So that's what has conspired. And again, to repeat, actually, the gliding path of September 27 is only on the second part, not on the first part. So if a
Okay.
bank has not recognized the initial stage at net book value, they're still at, I should not say fault, actually, I should say error which has happened in accounting terms, so which should be cured. So there
Yeah.
is no gliding for path till September 27.
Typically, this is again the difference of opinion we always used to carry. I recall the 4-year-old discussion on the SR accounting, which we recorded and which is available on the channel for those avid viewers who would like to see how the ARC accounting was done. Dhananjay was there to talk about that. Coming back to a couple of basic questions, of course, we'll be talking in detail about the accounting treatment as well. Um, how this is SNFA is different from financial asset or other assets or other real assets? How do you explain that? Is it different?
Yeah, it's slightly different actually. In fact, SNFA are supposed to be part of other assets. It's not a fixed asset per se. So if I compare that with fixed asset, as far as fixed assets are concerned, they're typically for the use by the bank itself. So SNFAs are not meant for that. SNFAs are meant for a purpose of kind of a settlement of advances. In the sense, it's a recovery process.
Yeah.
Now, having said that, what is the repercussion is that they will not be subjected to depreciation per se, but they will be subjected to confirmation that they have a realizable value in that. So
Okay.
the bank has to keep on revisiting that whatever is the book value which is left out, whether it is sufficient to cover the recoverability of that. So if there is suppose a sudden deterioration in the realizability for whatever reasons, reasons can be anything, right from natural calamity till we can say maybe you know say suppose say access is restricted or something of that sort. So that they have to test it. Second is as far as assets held for sale is concerned, there is no such nomenclature which is there in the balance sheet section. So it's not like asset held for sale. It's a separate line item as SNFA.
Okay.
Another point is that it is slightly different from the concept which is there in BR Act related to non-banking asset, wherein it might happen that a bank acquires a real estate, in the sense immovable property, and they don't use it for their own purpose within a reasonable time. So in that case, the BR Act specifies that it's a non-banking asset, but SNFA is not the same actually.
Right.
So that's why I said that SNFA is a subsection of NBA, you can say, which is
Yeah.
there in BR Act. So
Okay.
that will remain entirely different. Probably what needs to be done is within non-banking asset, uh, those banks, especially where in non-banking asset is there and also SNFA is there, they need to bifurcate that maybe as a schedule to balance sheet, because in balance sheet it will be a single line item, and give a clarity on that, because in some banks the NB is there wherein it is not used for the banking purpose.
Okay. One more critical question that the people have asked me post these two shows is that at what stage that the bank should acquire the borrower's property? Has RBI linked the SNFA with SURFACE, DRT, or any court auction, something like that? What's your view on that?
See, as far as my view is concerned, it's up to the bank as to which state they want to go for SNFA. Of course, typically, unless and until the account turns into NPA, the bank shouldn't be going for that. A prudent practice is that bank should first make an effort to sell off in the open market. Open market means by calling auction and taking all the other remedial measures. If those measures fail, it's worth it to think for SNFA. But it should not be kind of a first option of recovery. It should be always the last option of recovery. Or wherever bank feels that the recovery might get affected because of a delay in acquiring the asset for whatever reasons.
Okay.
So if a bank is pushing that as a first measure, there has to be a substantiating reasons for that as to why bank has opted for that.
Okay.
Otherwise, the easy way or usual course will be to ensure that it's used as a secondary or maybe a last option for the banks.
Yeah. There is one more confusion that is prevailing is that the directions are normally, I mean, these directions are normally insisting upon the independent valuations before acquisition. And
Yeah.
why this two independent valuation? And there was some error on my part also because I had stated that two valuations are required for the property which is valued up to 5 crores. But if you look at the Reserve Bank of India guidelines, it is beyond 50 crores. So one of our viewers corrected me. I am not in a position to recollect his name, but he corrected me, sir, it is 50 crores. But then coming back to this question, these two independent evaluations, why Reserve Bank of India wants to insist in case of SNFA, and whether the valuation norms which are prescribed in other directions are applicable here, that is 50 crores and above. How do you view that?
In fact, I will have a slightly divergent view. There is no condition as to it has to be done only at 50 crores as far as this circular goes.
This
It
circular
is
goes is
more
right,
to
but then the credit circular says that two independent valuations are required if the property goes beyond 50 crores.
that is as far as valuation norms are concerned. Now,
Okay,
here the concept is that typically for SNFA to acquire the property, because typically the banks is settling the dues at a particular level. Now,
okay,
whether that particular level of settlement of dues, whether it is fair or not, that has to be judged. And in that case, you cannot have a 50 crores threshold, which is substantially on a higher side. In
okay.
fact, it's a question of whether the bank is fairly dealing with that property or not. So to avoid that, the two valuers are prescribed,
So
and
that
then the norms,
irrespective of
the
value.
normal
So
norms are
that
there.
is irrespective of value is what you are driving at.
Yeah, correct,
Whatever be the
correct.
value.
So it's more, yeah,
Yeah. वो 10 लाख का
because
वैल्यू भी
because
होगा,
the credit,
एसएनएफए करना है तो दो वैल्यूअर चाहिए. That's what you are
yeah,
driving at.
because the credit circular which talks about it is not about SNFA. It is about valuation
Okay.
as to whether the secured portion component, to a certain extent.
Yeah.
SNFA is something beyond that where the bank will get a pinch.
Yeah. Now, how this two valuation theory will strengthen the governance? I mean, what's your comment on that?
See, typically, when you have two independent values, and now that independent word is really important. So, what is expected typically as a benchmark is that you should not have a deviation between two independent valuation beyond reasonable, thing which bank can prescribe in the board policy as such. Usually, it is taken at 5% to 10%. That's the industry benchmark, but the bank can decide. In fact, if you make it at up to 10, it's a fairly reasonable thing. Now, how it will improve the governance is that, see, presume a chance that there might be a judgmental error on the part of the valuer, to assess a particular property. So the moment you have two such independent professionals working, the possibility of judgmental error will be reduced. I am not even driving over here that someone will intentionally do a higher valuation or something of that sort, because that is what is not expected from any professional. So I'm ruling out that possibility. But
Okay.
once it's coming from two independent sources, it gives a fair kind of a cushioning for the bank's management also as to how they have arrived at the upset price. And there is no other, additional third party evidence which is required, because this is amply sufficient to cover that. So it will take care of corporate governance issue.
Now, from the accounting perspective, would like you to throw light on a couple of things that when the immovable property is acquired under SNFA, what should be the initial recognition? Should it be recognized at fair value, auction value, settlement value, book value of the loan, or the recoverable amount of the loan? I mean, how will you help banks understand this with clarity?
Yeah. So first we'll start with what is the fair value. Now, fair value, as we discussed actually, it will be based on two independent valuations, and based on which typically the bank will decide upset price. And as typically even the banks are following
But
the
then
practice,
upset price is
there is the
required for SNFA under the Maharashtra State
no,
Cooperative
no,
Act.
not really. No,
Yeah,
no, no.
not really.
What I'm driving at is See, the typical banking
Not
practice is
strictly
that
in the sense of the
uh,
cooperative law you're talking. Upset price is
yeah,
not from
yeah,
that sense.
yeah, yeah. No.
Yeah.
So I'm just using the word for the simple reason because typically the banks will first go for auction. That's what is really expected.
Okay.
And what is expected and what is even written in the circular is that banks should have a broad policy about when they will go for SNFA. So the eligibility criteria, delegation matrix, all these things are required to be there. So I'm presuming that the board approved policy is there in place. Now the in usual recourse, what typically should be included in the policy is that when the bank should think about SNFA. So prudent way is that the bank can decide about say one, two, or three options which fail actually to fetch the price which the bank has decided. So offset price is just a word which I'm using. So
Okay.
typically the two fair valuations will help the bank to decide even the offset price. You know that it's a fair price and at least that much should be fetched. Now presuming that the auctions have failed, but the bank feels that it's a fair price, bank has entered into that bidding process as a last bidder and they acquire the property. So we have a fair value at which the property is acquired. Now that fair value, at the same value, the banks will pay the stamp duty. They will have the registration done because unless and until they complete this process, the risk and reward will never get passed on to the bank.
Okay.
Now, once that is done, actually, so that is the amount which is indirectly supposed to be recovered from the borrower. So suppose the borrower is having say rupees 100 as outstanding. I'm saying total. So say 90 rupees is my ledger balance and say 10 rupees is my IROR. If the fair price, at which the bank has acquired it, suppose it is 100, it will settle the entire dues. If it is proportionate, it will settle the proportionate dues. So let's take a simple example about presuming that entire 100 rupees is received. So I'm taking a very straight case. So 90 rupees is ledger balance, 10 rupees is IROR, and let's say 60 rupees is my BDDR. So naturally, by simple arithmetical calculation, my net book value will be 30. And the borrower account will get squared off. He will get a no dues letter. His CIC reporting will show that the loan is concluded. So it's a typically a recovered amount in entirety. Now the biggest challenge over here is we are presuming that this 90 and 60 example which I gave. So I am presuming here that the banks are having requisite data to ensure that the BDDR related to that loan account is identifiable. Now why I am saying that is many a times the banks are maintaining a provision which is above the IRAC norms. That is IRAC norms are giving a minimum threshold. Some banks are having 100% PCR. In some cases, the banks are having more than 100% PCR also. Now, the biggest challenge is that hypothetically, let's presume that a bank is having 100% PCR or maybe more than 100% PCR. So, I'm not getting into that controversy because that is not the topic of discussion today. How the bank will say that against my, say, 90 rupees of ledger balance, I am having only 60 rupees of BDDR. Because on one hand, when the bank claims that for net NPA, I'm going to use my entire BDDR. So the corollary of that is it means that you are providing 100% for each and every asset. So the biggest challenge will be before the banks who are having 100% PCR or maybe anything more than BDDR will be how to identify that surplus BDDR related to this asset. So the bank has to first work out that they need to have an NPA chart or an NPA schedule which gives a specific allocation of BDDR to every loan account. The total of that BDDR has to match with the balance sheet figure. And there has to be a logic behind that. You cannot ad hocly say that in some cases have increased the BDDR and percentage is differing. So bank has to do an internal working for that. If a bank has 100% PCR, my personal view is that the bank cannot say that there is any net book value left out. Net book value will be zero because if net NPs are zero, net book value of any loan will be zero. And it's a little hard to digest actually this fact that the moment you have PCR as 100%, NBV will be zero. But accounting wise, that's the prudent way. So those banks who are having BDDR above the IRAC required norm, whatever they call it, floating BDDR, surplus BDDR, either they have to allocate it to a particular loan account or they have to say that BDDR is only a prudential provision, not exactly a provision for NPA. Because the moment you use the word as provision for NPA, that should be allocable to a NPA.
Okay.
I know that it's not that easy to accept and digest this fact, but that's how the wording has to be used.
There will be a lot of questions on this to me as well as to you. This is what I believe. Anyway, coming back to our basic discussion, There is one more point which I wanted to ask you about this accounting. Which accounting standards are applicable in this SNFA kind of thing? AS10, AS13, or AS1028? Or are there any guidance notes issued by ICI on this? What would you like to comment on that?
See, as far as accounting standard is concerned, it's definitely not AS10 because it is property, plant, and equipment, which is related to fixed asset typically. So it's not a fixed asset. So AS10 doesn't apply. AS13 is related to investments. So it is not an investment. And anyway, AS13 doesn't apply to banks and financial institutions. So AS13 is out of picture. AS28 is impairment of asset. That will not affect over here. That might affect at a later stage when NSFA is recognized. Like suppose there is an encroachment or there is a national calamity, there can be impairment of asset. But per se, that is not for NSFA as such. So no specific standard I can talk about, but it's a simple accounting principle actually. Means I don't foresee a reason for normal debit credit entries in accounting which one has to pass. The second, point which I would like to mention over here, which I mentioned in the initial stage itself, that institute already has the institute guidance note, which of course is as of now issued for commercial bank, but the concept remains same. Uh, if I recall, actually, maybe 5 years or 10 years, the norms or the guidance which is given has remained same. It talks about net book value. So, from institute side, if you talk about the publication part, it's already there in place. It's available in public domain, and there is no change in stand on years together. So, it's a kind of a static stand which has been taken in guidance.
Okay. Coming back to this same story, how the bank should determine the carrying value after acquisition? Is the periodic impairment required to be evaluated and accounted for? How will you advise? Or
Yeah,
rather,
actually,
along with that, you can talk about the depreciation also in of the values which are
yeah,
recognized in the book.
actually, depreciation per se will not apply. What the circular talks about is it should have a gliding path in the sense it will gradually go to extent of 100% level as the NPAs are deteriorated. That's what is mentioned in the circular. But in addition to that, what is important is that say let's say hypothetically, say NSFA has been acquired at say substandard level, so it's only 10% of net book value, so 90% remains. So if that is the case, there is a possibility that, say, in 1 or 2 years, there is an encroachment or a legal dispute or a national calamity wherein the realizable value might reduce. My suggestion is that ideally, such assets should be tested periodically for impairment. If there is a deterioration in value, the bank should recognize that, as far as the accounting is concerned, as a kind of a provision or a deterioration in other assets.
So that's
Now,
why the
this is
circular is
something,
not circular is very silent on
yeah,
the
I will come to the point.
reductions.
See,
Yeah.
it's a basic, no, but it's a basic accounting concept that whatever appears in your asset side, if the book value is going below, if the book value and the realizable value, if you compare, if the realizability of a book value, of that asset is deteriorating, that provision is required to be made. So whether it is a non-banking asset or a NSFA or whatever you call it, even a normal other asset, let's say receivables or miscellaneous assets. So if there is a realizability is questionable, you have to make a provision. So the same norms will apply over here. Now here it's not a question of realizability, it's a question of realizable value. So the bank should incorporate that in the policy that say every alternate year or maybe once in 3 years, they will, refer to a valuer and verify that whether the realizable value is more than the book value or not.
Okay. Okay.
And that will be a sufficient thing, but it won't be required for all the assets because many times the assets are acquired in DA2. So
Okay.
once they fall into DA3 category, theoretically, there will be 100% provision.
Okay. How would you advise on the disclosure norms on SNFA? I mean, is there anything specific that you would like to talk about?
See, the accounting policy, the banks were even supposed to disclose earlier also.
Yeah.
So there is nothing new. If someone has missed it out, it's better to disclose that about the net book value. And again, to reiterate, recognizing the assets and net book value is nothing new. That is something which was supposed to be followed. And if someone has not followed, it's not a gliding path. They have to rectify the accounting errors which have been committed.
Okay.
So there is no change in accounting policy. Bank cannot say that earlier we recognize on a gross basis. A wrong accounting policy can never be continued.
Now, looking from the banker's point of view, what the statutory auditors or the audit per se would be following the procedures in this respect, and what kind of documentary evidences you believe that the bank should keep ready in terms of while facing the auditors in respect of specified non-financial assets.
See, as far as the documentation part is concerned, from auditor's perspective, what they have to verify is or confirm is that whether the bank is making them available sufficient and appropriate audit evidences. Now, if you
Okay.
talk about SNFA per se, one is the board policy which the bank should ideally have. Second is the valuation process which the bank has carried out, the auction process which the bank has carried out, because otherwise they cannot enter into the bidding process or any other alternative method which the bank has followed to acquire the asset. Bank should produce before them the stamp duty payment and registration, fees paid, the title, how the title has transferred in the name of the bank, and most importantly, the bank has to have a substantiating evidence that the risk and rewards related to that asset have been passed on to the bank. So a simple, case like just to take an example, let's say Section 101, acquired properties in Maharashtra State Cooperative Act, you can have the title changed in your name without payment of the stamp duty, but it's only a notional title change. It doesn't give you a risk and reward passing test eligibility. So in those cases, those are not SNFs. So the auditor has to verify that whether risk and rewards are passed on, whether the method is correctly followed or not, and a natural fallout of that is whether the accounting treatment given is correct or not, and whether it is properly disclosed.
Okay, coming back
So
to your
that's what the auditor will look into.
yeah, coming back to your expertise area, Reserve Bank of India has issued a single pager amending the IRAC guidelines. So, would like you to help the banks in understanding the changes that the Reserve Bank of India has issued in IRAC norms, and how do they impact the SNFA?
No, actually, I don't think that they are really impacting SNFA per se. Means, there is no change in IRAC norm as such related to SNFA. SNFA has remained same. What was there in non-banking asset, it has remained same.
Okay,
Only it's a stringent procedure wherein, subsequent to acquisition of SNFA, uh, the IRAC norms partially continue, as a shadow account. Only that is the change actually. Otherwise, there is no change of perception in IRAC norms per se.
okay. Sir, I believe we have come halfway through the questions, and
Yeah.
uh, probably we may have to continue on the next Sunday as well. There are a lot of questions which are still not responded by us. I mean, I have not asked you. I would like to ask you that, and we would like to conclude this session on the next Sunday as well. So keep watching. So thank you, sir. Thank you so much.
Yeah. Thank you very much.